Hi everybody, Josh Masters here and welcome to the April edition of the BuySide Market Essentials Report. All the critical information that you want around the property market across Australia. And starting off with news this month, the RBA hit a record 18 months by keeping the rates on hold at 1.5%, which is great news for both investors and homeowners. We also saw the ABS statistics come out for population growth for the September quarter, and we're seeing a rise in 5 out of 8 states, which is great news for the nation as a whole. However, the AMP chief economist Shane Oliver has also weighed in the conversation on negative territory, saying that the tighter lending restrictions on both investors and foreign buyers, as well as an increase in supply and more realistic price expectations from the market, are starting to take its toll on market prices across Australia. Now, if we look at Sydney, we're seeing ABS research showing that 40% of people moving from overseas actually end up in New South Wales, which is a great bonus for the state in terms of population growth and something that will definitely drive property prices forward moving into the future. However, we have seen massive growth in Sydney and New South Wales as a whole for the last 5 years, and now we're starting to see that peter off, and we're seeing negative growth at negative 3.7% for the last 12 months, which indicates that Sydney market has as a whole generally come off the boil. Now, on a positive note in Melbourne, we're seeing the rental market improving, with vacancy rates falling from 1.8% down to 1.4%. Unfortunately though, Melbourne has also had some massive price growth recently, and we're starting to see that come off the boil, with median prices falling from $751,000 down to $720,000. AMP Capital is saying that the market will probably continue to fall another 5% over the year, indicating a softening of the market due to affordability and falling auction clearance rates. Melbourne is also showing some of the lowest gross rental yields for the rental market, with all dwellings coming in at around 2.9% and a whopping 2.6% for houses, which is really tough if you're holding a house as an investor. Now, in Brisbane, we're still seeing the market hurting from an oversupply of units, with the growth rate of units falling slightly again, with a negative 1.4% for the last 12 months. Houses themselves have flattened out to 1.8%, but at least in positive territory. On a positive note, the rental market is improving, with vacancy rates falling to 3.4%, which is a good sign for investors in that marketplace. Now, in the Perth market, this place has really suffered over the last few years because of a downturn in the mining boom. However, we now may be seeing some signs of hope. Now, while the growth rates are still in negative territory at 2.2% on the negative side, we are seeing that slight increase by 0.7%, which could be the indication of the turning market. We're also seeing some of these suburbs increasing by up to 18% over the last 12 months, but these would be few and far between, and you really have to cherry pick where you're going to be. On a positive note, we're also seeing the rental market in this city improving to 4.1% for this month alone. Now, the ACT is one of those states that has benefited from positive population growth, with figures rising to about 1.8% for the last 12 months. We've also seen a great rental situation with falling vacancy rates to 0.8% in the ACT, which means that if you're trying to rent your property out, it should be going in the first 1 to 2 days that it's being advertised on the market. Unfortunately, prices have softened here just slightly by about $15,000 on the median price point, which brings it down to about $675,000. However, this city alone, Risk-Wise Research House, has made note of that because of affordability and increasing infrastructure projects coming into this area, we're likely to see positive growth moving forward. Now, let's finally look to Darwin, unfortunately one of the worst performers across the country due to the hangover from the mining boom. We're seeing prices increase slightly on houses, but still in negative territory at around 6%. Unfortunately, units have slid even further on their median price, making it a negative 10.4% decrease on the 12-month growth rate. We're also seeing from RP data measures that all those investors who sold in December, about a third of them actually lost money, meaning it's not a great place for investing market right now. So that's it for this month's Market Essentials report, everybody. I hope you've really enjoyed the capital city updates across Australia. If you'd like to get the PDF report, please click on the link below. I'll put it in the notes for you, and look forward to seeing you in next month's Market Essentials report for May.